there's one price action strategy for day or swing traders that is going to change the way you trade forever and ever. But here's the deal. You need to watch this video up until the end. And you need to understand what is it that I'm looking for when I'm actually placing these type of trades. So if you are looking to make money with Forex, the easiest possible way, the easiest way to understand it, please watch this video as many times as needed. All right. It's not going to be some sort of magic trick or anything like that, but it just needs 4 different indications or 4 different signals in order for us to enter a trade and be really, really profitable with Forex. So with that being said, let's go ahead and dive right into it. Hey everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. In today's video, I'm going to teach you the easiest price action strategy for Forex traders that you're ever going to learn. So hey, if you're new to my channel and you're into Forex trading, crypto trading, or any type of making money online, then this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification for every new video that I upload. With that being said, let's jump into the video. All right, so before I actually start with the content of the strategy, let's go ahead and make a huge difference between day trading and swing trading. Swing trading basically is positions that you actually do or you actually place that take more than one day, sometimes 3, 4, sometimes even a month. Day trading is when you place positions only during the day, and most of the times you exit the position before the end of the day. So this strategy is for swing trading. And once you actually learn this strategy, trust me, you're gonna quit Forex trading or day trading. Okay, so let's go ahead and begin with what's important. The first thing that you gotta do is add an indicator called EMA 50. You go to indicators in trading view, you type in moving average, you go to moving average exponential, and it's right here. You go into these settings or this little thing right here, and then you select the 50. The style is really up to you, but you gotta have the 50. What that's gonna do is that it's going to determine the trending of the market, okay? So on the daily chart, whenever you actually see that there is this movement, the 50 EMA is above the candlesticks, it usually means that the price is going down, it's a downtrend. And whenever the opposite happens, like right here, it basically means that you're in uptrend, okay? So that's on the daily chart. And that's the first thing that we got to do. We have got to identify what is going to be the trend on daily chart. For instance, right here, you can see that it's becoming a downtrend, not entirely, but it's becoming a downtrend. Second thing that you're going to do, this is the 4-hour chart, but this is the daily chart. And I'm sorry, I wasn't looking at the wrong one, but it looks like a clear downtrend, doesn't it? So it's a clear downtrend on the daily chart. So if we actually go into the 4-hour chart, this is what you'll see. So you know it's an uptrend, it's a downtrend, okay? In the 4-hour chart, it's super important that even though you're gonna see movements just like right here, if you go into the daily chart, you probably saw this, but the trending is exactly the same. It continues to be a downtrend, okay? So it's actually super important that you understand it. Now, let's go ahead and find the difference, or let's find the combination between the trend and the structure. First of all, whenever you actually trade, when you see a downtrend on the daily chart, you're gonna only trade with the trend. Means short positions, sell positions. And the structure that we're gonna be using is a structure that is super, super easy to understand because it is this baby right here, which is dropping, getting retractions, dropping, getting retractions, dropping, getting retractions, dropping, retractions, and here. Now, here's the deal where we are going to actually, what isn't, let me go. There we go. What we're going to do is that we're going to enter in the short positions. All right, in the retractions, that's when we're going to enter. But let's go ahead and see some live examples right now so that we fully understand exactly how it goes. Here, we're gonna wait first of all for the price to actually give me a consolidation. We are going to be looking for breakouts on support levels when we're looking at a short term, and then we're gonna look for breakouts on an uptrend as well. You can see right here that this is a clear support line. So the support line, whenever you're in a downtrend, it's more likely that the price is going to be broken. Let me just go ahead and remove my sweater. So in a downtrend, support lines are going to be broken, and resistance are more likely that are going to be respected. So what we look at is what is the next support line. Once it gets broken, that's our entry price. Okay, so for instance, here it got broken, so I would say this is my entry price. Okay, what is it that I'm going to set on as my stop loss? I'm going to take a look at all the wicks that have been happening. If, for instance, right here, I see this is like the highest wick. So therefore, or you can actually use, you know what? Let's just go ahead and use the block. This looks like an area where the stop loss can be at. Okay. So I'm going to actually set my stop losses slightly above 1 or 2 pips. And then that's going to be my entry point. Now, where's going to be my exit? I'm going to say go with at least 3-to-1 risk reward ratio. Right here, 3-to-1. Somewhere there. So let's go ahead and see what happens. Some of those trades are not going to be activated. I want to say that up front. Okay. For instance, this one was not activated. Okay, so right here, basically what we're looking at is a support line that is actually being formed. So we need to wait for the breakout. We waited for the breakout, and what is it that we do? We enter a position right there. And depending on where you're actually trading, for instance, if you have a new support line right there, you can actually use it. All right. If, for instance, the price dropped enough, it went right there, you can go even more than 3-to-1. For instance, right here is 3-to-8. And now, boom, it actually touched and it activated. Now, this is a new support line. Once this one gets broken is when we are going to have a new pending order. For instance, right there, it got broken. We're going to enter here. We're going to see what's a good 25 pips. Right now, we don't have a support line. So you can do 2 things. You can close it at 2-to-1, or just do, I don't know, 6-to-1 and then close partials. It's really up to you. But we're going to see what happens there. And then, boom, it got activated right here. Let's see if it was a winner. Oh, no, it was a loser. All right, that's fine. And then we keep on looking on options or opportunities just like this one. Whenever, again, a support line is actually broken, such as right here, this is a good support line. So then you enter a short position, again, slightly above. And this is a 4.36. I'm not sure, probably closing partial, but yeah, it went down. And then again, now, it is still a downtrend, so it doesn't matter if it actually moves in the market and becomes an uptrend in front of us. We are still going to go only with the downtrend once the price of the 4-hour chart goes back to downtrend, because we're not going to trade against the trend. As simple as that. Here we have another example as to what could have happened. This is on NZD against the US dollar. So you notice that there is a support line right there that is actually it was broken literally right now. So then boom, you enter the sell position and it got activated and starts going straight down. Now, it's not probably going to happen immediately, but boom, 738 in risk reward ratio, 738. And then another one, the support line was actually broken. So what we do is that we actually enter another sell position. And of course, again, you can set up for 6-to-1, 7-to-1, 8-to-1. It's really up to you, but then you can close on partials. This one went all the way to 15.75 in risk reward ratio. Again, it's super important that you understand that when you actually are trading like this, the entry and the exit is super important. So the entry, it needs to be at the same level where the latest support line was actually broken, Or if we actually see an example of an uptrend, which let me see on daily chart what pair is an uptrend. Oh, this one's right here. Let's see in this area right here, but in 4 hours. In uptrend, it would be on resistance that are actually broken. Okay, so for instance, you can see this pair right here went all the way to this level. Now this became a new resistance area. So in this specific case, you enter buy positions. You don't enter sell positions. You enter buy positions. And again, you can go as much as you want to, as long as you're closing partially and stuff. I don't have right here an example. Oh, there you go. This is a good area. So for instance, right here, we have a big jump and then boom, it basically gave me a resistance area in this right here, which got broken later on. And what is it that I do? I enter as much as I can. Let's say 3 to 1, since this is what we were talking in the past. But guess what? He gave me a new resistance here, got broken, a new entry, a new entry. Even you have 1. You want it, and then you have another one in the exact same resistance. Okay, so the point of this specific strategy, people, again, is wait for the supports that are broken in a downtrend or the resistance that are broken in an uptrend, and then enter directly with the trend. So the pairs, what they're gonna do is that they're gonna continue their way up, but eventually they're gonna retract. They're gonna activate some pending orders. They're gonna continue going the same way, continue getting pending orders, continue getting pending orders. You got all the way right here. You got some pending orders here. You got some pending orders here, and so on. Obviously, it's easier to see it in the past, but once you actually start practicing with this strategy enough, you're gonna have some awesome results. But let me know in the comment section if you've been using it or if you're gonna be using it, so that we can be on the same page. Hey, so hopefully you enjoyed the content of this video, and if you did, smash the like button to support this YouTube channel. But more importantly, if you have any questions or comments to share, you can always use the comment section below, and my team will be happy to reply to you. Thank you very much for watching this video, and I'll see you on the next one.